Great to use a quick look at the Statement of Comprehensive Income, or then the SOCI. So you are provided with the information relating to Happy Sports, who sells sport equipment and repair equipment for their customers for the financial year ended 28 Feb 2022. So in other words, your financial year started on the 1st of March 2021 up until the last day of Feb 2022. Right. So, in other words, when you are now preparing this statement of comprehensive income, you need to include all of the income generated or earned within this 12-month period and all expenses incurred in this 12-month period as well. And then it says that note that the pre-adjustment figures have been inserted in the answer book. In other words, they didn't give you the pre-adjustment trial balance in the information. They decided to already include that in your SOCI. So if we do not provide it within the answer book, then you must remember your first step when you are preparing your statement of comprehensive income is to start with the amounts as per the pre-adjustment trial balance. And then, very important, the easiest mark to get there is to remember that you must close off your debtors allowances to your sales. So in other words, subtract your debtors allowances from your sales figure as per your pre-adjustment trial balance. Right, then we move on to the adjustments. So I'm just going to put this over here. There we go. Okay, so Happy Sports earns commission on sports supplements that they sell at a rate of 10% of the turnover of the supplements. Okay, so in other words, we sell some supplements on behalf of another business, and they then say, thank you for doing this on our behalf. Here's a little kickback for you, basically. So that's your commission there. And it says that during Feb, an amount of 56,000 Rand of sports supplements was sold, and the adjustment for this specific commission that you earned has not yet been made. So remember that you must include all the income that you generated or earned for the current 12-month period. That period ended on the last day of Feb. So all the income that you earned up until that day must reflect in your statement of comprehensive income. They are saying that the Feb one is not reflecting yet. So it means that you must just go and add it. So your commission income is currently 54, but you need to add to that 10% of the turnover that you had for supplements for this month of Feb. Because during the month, an amount of 56,000 Rand of sports supplements was sold. You earn interest at a rate of 10% of the turnover, so 10% of the total cost. So in other words, 5,600 is what you will earn there. If you had to do the SFP, you would have now had accrued income if you haven't yet received this income. If you have received it, then it would have gone to your bank in your cash and cash equivalent. So always try and link it back to what is the other step involved if it's not in the SOCI. Right. Number 2 says that the account for water and electricity was received after the trial balance had been drawn up. In other words, we recorded all of the water and electricity payments that we were aware of, and that amounted to 24,000. However, we then only received this account, which we now have to assume is for the current financial year because they didn't tell us it's for March, because remember, you only pay or you only get the bill for what you have used. So if we now received it after we drew up our trial balance, it means that it was still for the current financial year. So the account that we received was for 860 Rand. So we must go and add that because we are not showing it yet, because we only received the bill after we prepared the trial balance. So we didn't know about it, not included. We must just include it now. If they told us that we have made payment, then it would have meant that we would have now credited our bank account because we no longer have the money. But it says that we only receive this account after the trial balance had been drawn up, which tells us that we haven't yet made payment. So in the SFP, we would have now had an accrued expense under trade and other payables, and that is a current liability. So here's my debit, and then my credit would have been in the SFP. Insurance, so let's go to insurance. Where's my insurance? Oh, there it is. Okay. Insurance includes an annual premium for fire insurance paid on the 1st of December. So it's an annual premium that you paid for the 1st of December 2021 for a full year. So up until the 30th of November 2022. However, your financial year ended on the 28th of Feb 2022. So whatever happened after that should not be included in your current financial year. But they said that you did include this in your current financial year. So you need to remove whatever is not supposed to be within your current financial year. Because if it's something that you've paid for that's past your current financial year end, that is considered a prepaid expense. So you paid 3,600 for 12 months. But of those 12 months, it was only December, Jan, and Feb. So only 3 months that was within your current financial year. So 9 out of the 12 months, you need to now remove from your SOCI because that is not a current year's expense. So I'm going to get my calculator real quick because apparently I decided not to open that. Okay. Right, so 3,600. However, 9 out of the 12 months is what I prepaid. So I must remove 2,700 from the insurance expense because it's not an expense for this year. This will be now reclassified as a prepaid expense under trade and other receivables in my SFP. Okay, the tenant paid the March rent during Feb. The rent was increased by 300 Rand on the 1st of Feb. So what that means is, remember, every time that you receive money, you record the money in your CRJ. They are saying that when you did all of these recordings, you also recorded rent that you received for a month that falls without your or after your current financial year, because your financial year ended on the 28th of Feb 2022. But you already then received the rent for March 2022. And after you then recorded all of these receipts for the year and March, that all added up to 27,900. So 27,900. So that 27,900 consisted of 12 months that you received the rent for, but we don't know what the rent is. So we shall just say for 12 months, I received the amount of X. Then I also received for one more month X, but with an increase of 300. So I received the monthly rent, but the monthly rent now increased by 300 Rand. And then you literally just solve for X. So 27,900 plus 300 becomes minus 300. And over here you have 12X plus X, so you have 13X. Therefore, X is equal to, just get my calculator again and just minimize this for now. Okay, so 27,900, right, minus 300 divided by 13 because you are showing 13 months. Let me just double check. What did I do here? Oh, just let me pause.
Kylie Darwins, if you're in the building, please make your way to reception. Kylie Darwins, if you're in the building, please come through to reception.
Okay, sorry. So I now said for 12 months. Let me just quickly, sorry. I just want to remove this real quick. So for 11 months, tell you now. There we go. So for 11 months, we received X. And then for 2 months, we received X plus 300. Okay? Because the rent was increased on the 1st of Feb. So for 11 months, that is then March up until the 31st of Jan 2022, you received X amount, that's 11 months. Then for Feb and March, you received the increased rental amount, and it increased by 300 Rand. So 27,900 plus becomes minus, but it's 2 months that you receive the 300, so 600 equals to 11x plus 2x, so 13x. Let me not unnecessarily write that. So 13x. Okay, so it's 2 times x plus your 11x, and that's how we got to 13. So now I can do my calculation. So 27,900 minus 600. Divide that now by 13. So there you go, 2,100. That was X. So in other words, the amount that you received on a monthly basis before the increase, that was 2,100. So you must now remove one of those months because it should not be included in your current financial year because it was received in advance. But you must remember that here we calculated X, and X was the amount of rent that we received before the increase, because then we said the amount received plus 300 Rand to be received for 2 months. So it's not your 2,100 that you received in advance, it's that plus the 300 Rand increase, so minus 2,400. And that will then be included in your trade and other payables, income received in advance in your SFP. Right, then the bank statement was received after the pre-adjustment trial balance had been drawn up. So in other words, we only saw these transactions when we received our bank statement. And this happened after we recorded all of our journals and then compiled the trial balance. That means that the 2,234 for bank charges doesn't include the last bank charges on the last bank statement that we've received. So it means that we must now just go and record it because it must be in our books. So debit bank charges, you pay your bank charges, so you will credit bank, but we're not doing that one now. Right. So then you also had interest on overdraft. It was discovered that interest on overdraft of 1,080 Rand was left off the pre-adjustment trial balance. So let's go see. Right. So interest expense, it says interest on overdraft, first of all, is the amount that we saw on the bank statement that we haven't yet recorded. So let's start off by recording that, 110. Right. Then it says it was discovered that interest on overdraft of 1,080 was left off the pre-adjustment trial balance. And then by mistake, they gave us the 1,080. So it was actually not left off. It was actually there. So we are good with that. It should be there. Then the last one says a debit order to Boot Insurance Brokers for 800 Rand for the monthly insurance premium against theft. So we also saw on our bank statement, after we have already now recorded all of our transactions, we saw that we actually also have another insurance payment that we made that we have not yet included in our insurance. So if they tell you that you received the bank statement after the trial balance had been drawn up, it means that you must just simply go and record all of the transactions that you now saw on your bank statement. Right, we are almost done again. Next up, we have an employee that was left out of the salaries journal for Feb. In other words, the salaries and wages, together with the contributions that you see within your SACI at the moment, in other words, your pre-adjustment trial balance, those amounts are incomplete because one employee's Feb salary is not yet included in your amounts. You must remember that we always show the gross salary or the gross wage in the salaries and wages expense. Okay, so it's always the gross. Don't get confused by us now giving you the net salary and all of that. You only want to see your gross salary in the expense. It then says that the business contributes on a rand for rand basis to UIF. In other words, whatever is deducted from the employee's earnings, we will match that as an expense, a UIF contribution. And we are now including it because this employee had been left out or has been omitted from the records. Okay, and then if you had to do it in your SFP, they would have told you this person has been paid. So in other words, then you credit back. Or this person has not yet been paid, then it will remain in your creditors for salaries account. Right. Number 7, second last one here, says a credit note issued to a debtor dated on the 25th of Feb was not recorded in the books. So if you haven't yet recorded this, it means that you must now record this. So you must show that the debtor no longer owes you the amount and that you had debtor's allowances, which means that you have less cost of sales. Okay, so it says that the goods returned by Softball was 6,200 Rand and a markup of 60% on cost applied. Price reduction on unsatisfactory repairs of a tennis racket was now also on this credit note. So first of all, your credit note was issued for goods returned. So debtors' allowances is subtracted from sales. You no longer have that sale, which means that you no longer have the cost of sales because the debtor returned the goods at a markup of 60%, so times 100 over 160 to get back to your cost of sales figure. So 6,200 times 100 divided by 160. So 3,875. There we go. So this is to be subtracted from your cost of sales because you no longer have that sale. It's now debtors' allowances. That's the first part. The second part is a price reduction on unsatisfactory repairs of tennis rackets. So if you look here, you'll see that you have fee income. So you are rendering a service of repairs on tennis rackets, and you then receive money for it. But this customer was not satisfied with the repairs that you made. Therefore, you are giving them a refund, or you are saying that you no longer have to pay me 540 Rand of the total repairs amount that you had to pay me initially. So remove it from the fee income. Then the last one says that the stock count on the 28th of Feb revealed the following stock on hand: trading stock and packing material. So I'm going to start with the easy one, packing material. Remember that packing materials, cleaning materials, stationery works the same. Okay, we can also say consumable stores expense, and then you had some on hand. So that just means that you've now recorded a lot of packing materials that you purchased during the year that you have now said this is my expense. What they are saying is that of this, you haven't yet used 900 Rand, so you may not include it in the expense because you haven't yet used it. So you need an accurate calculation of your profit for the year, and therefore you have to remove whatever expenses you haven't utilized yet. You must now remove that because it will only be used in the next financial year. So you are going to then debit consumable stores on hand to be included in the inventories in your SFP. Then trading stock. So trading stock count revealed 83,100 in your physical stock count. So if you look at your SOCI, they didn't tell you you have trading stock of X amount. They told you you have a trading stock deficit of 82,000 Rand. In other words, you now have 82,000 Rand of stock that you haven't yet counted, so that you haven't accounted for at the moment. So you must now compare this trading stock deficit to your physical trading stock that you counted to see, do I really have an 82,000 Rand trading stock deficit, or did I now actually account for some of it? But now you must remember that You recorded this transaction before you took into account that one of your debtors returned stock to you. So remember, you said that you have to credit your cost of sales, which means that you debited the trading stock because you received your trading stock back in stock. So you now no longer only have 82,000 Rand trading stock deficit, you have that plus your 3,875. So you have a trading stock deficit of 85,875 Rand. That's a lot. However, it's okay because we have now counted and we saw that we actually have 83,100 Rand in stock. So the trading stock deficit is only the difference between the stock deficit that I thought that I had minus the stock that I was able to account for during the physical stock count. So it's only the 2,775 Rand that I have as a trading stock deficit. Right, so you can add totals, I'm pretty sure. But what's nice here is I can explain the rest of it without needing the total. So you must just remember that you must calculate whatever you have in the brackets and write the total here in the answer column. Then gross profit plus other operating profit is equal to gross operating income. Gross operating income minus operating expenses is equal to operating profit. Operating profit plus interest income is equal to profit before interest expense. Minus your interest expense, so 1,190, to get to your net profit for the year. So 1,079,124. Oh my gosh, what did I do now? 1,079,124 minus 1,190. There you have it. That is your net profit for the year. Okay, so please remember to complete all of the totals so that you don't have any blanks here. And that is your Saki.